US dollar, euro, Japanese yen, and gold. Okay, so we're going to be looking at sort of an in-depth analysis of the market, USA, Europe, Japan, and gold. Lots of things happened again over the weekend. That Donald Trump is imposing 25% tariffs on aluminium and copper, if I'm not wrong, or steel, something like that. But these, of course, push the US dollar, the gold up, and presenting some nice opportunities on the long side as well. So before we go any further, I'm going to put it up the risk disclaimer, and then we can start. I'm going to give a minute to everyone to read, and then we should be ready to go. All right. So hopefully everyone could read everything. So first topic, get out of this. So first topic is the US dollar, actually an overview of recent market development. So let me move it to FinLogix and leave it here for the sake of. But, when we look at the global market, we can see, a lot of events happening, like significant events happening and influencing especially the FX market. We did have some, of course, on stocks. We did have as well on other markets, but majority on Forex, I would say. If you guys don't know, but recently, as I was mentioning, Donald Trump announced a plan to impose 25% tariff on steel and aluminium imports. So basically, any steel and aluminium import through USA will be charged at 25% more. So if it was costing $100, now it's costing $125. So it is, good and bad as always on the tariffs, but it basically, in my opinion, it's escalating the trade tension, and it raises more and more concerns about the potential trade war to begin. Because if USA raises, let's say, 25% as it did on aluminium and steel, Australia exports to US will be charged at 25% less, because USA will charge 25% more. So Australia will be losing 25% of money. Okay. Good morning. So, basically, I guess it is a good thing for US, but bad thing for other countries. And that possibly can escalate further and giving like, oh, okay, so if you're charging me 25%, I will charge you 50% on your exports. China may say that. And then the trade war begins, So it did have some sort of fluctuations on the market over the last day and today, but nothing too crazy as like last week. Okay, last Monday was really, really crazy. So let's have a look at the recent performance on the DXY. So remember, I just say last Monday. So yeah, we can see the gap on last Monday open, and then all the correction down to 107,300, all the way down from 109,897. So that's a pretty big drop. It's like somewhere around 2.3%. And I was slowly trying to recover. So the US dollar is strengthening. Okay, this Monday it did strengthen because of this proposal. But investors are viewing the dollar as a safe haven asset amid these global uncertainties. So if we look to the US dollar index, that's the DXY, that measures the US dollar against a basket of other currencies, it is slowly getting there, okay, and is reflecting this increased demand. So everyone knows that something is about to happen, but no one knows what's about to happen. So, and no one knows when is about to happen as well. So basically, we do have some sort of tension going out, and we can see gold going up. We can see US dollar slowly getting there. So there is definitely, on this scenario, I'm definitely a long on gold and long on US dollar. And I've been mentioning that like for quite a while already. Um, Maybe even on silver. Okay, I'm not too sure, but we could even long silver as well. So, what are the factors influencing the US dollar value at the moment? So, there are several factors that are contributing to the US dollar current strength, and I would say three mainly. And the first one is the Federal Reserve monetary policy, as everyone knows. Inflation data that we do have the release for this week as well, and of course the trade tensions. Okay, so first, the Federal Reserve MP, the monetary policy, the instance on the interest rates that they're giving to the public is significantly impacting the US dollar. So basically, they are maintaining higher rates, and typically higher rates will attract foreign investors seeking for better returns on the yielding of that country. So thereby, they will be increasing the demand for that currency. So in this case, the US dollar. And for like Europe reducing 25 basis points and UK reducing 50 basis points and Canada nearly to normal, Japan raising 25 basis points, and US dollar is, USA and the Fed is one of the biggest players in the world and maintaining the approach of not going anywhere. Most likely they will be keeping this approach, and the US dollar index will possibly come to the back to those highs again. Okay. The second point is the inflation data. All right, we do have on the economic calendar, we do have some data coming up this week from USA. We have retail sales. If you haven't watched yet the video I've posted today on YouTube, I've talked about that. But if we look on Friday, well, actually, it's on Thursday. Sorry, yeah. If we look on Thursday, we have the inflation core rate to be released, and is expected to be somewhere changes. Okay, some changes. So the inflation rate month over month is expected to decline 0.1, so having a little bit of a deceleration from 0.4% to 0.3%. The inflation rate year over year is expected to go nowhere, so 2.9 is the same as the previous. The core inflation rate is very important because we have to be paying attention on the shelter prices, because 3.2% from the previous to 3.1% now, we may have wrong. Okay, I do believe that it will be no changes to some changes. Okay, to some change to the upside. So maybe an acceleration in inflation, of course, would drag the US dollar up even more, will push the US dollar up even more. Okay, so the recent US inflation data, it has shown some sort of a stickiness. Okay, because if we come here on the core inflation, we can see here that it's somewhere over 3.2 now, and then 3.3, 3.3, 3.3, 3.2, 0.2, 0.3, 0.4. So nothing too crazy, all right? It seems to be very sticky since September, October, November, December. Yeah, so since September, it has been pretty sticky, all of the releases. So not much happening over the inflation into US. Okay, so most likely it will be proven to be sticky again. And of course, it is influenced by the new tariffs. And that's what I've been mentioning, I think was last week on Tuesday. I've mentioned about the pros and cons of the tariffs, okay? And there are pros, of course, it makes more money, but there are cons that makes more inflation as well. So inflation will be sticky. If they can find some sort of balance, then yes, that's good. Congratulations to the US presidential. I think it's called no, the dodgy thing is another part of the government. I can't remember that one, the foreign. Anyways, so it is to be proven to be very sticky. Okay, so high inflation will lead to the Federal Reserve to maintain. There are some speculations to even raise the rates, all right, to prevent the economy from overheating again. I don't think so, but there are speculations, and if there are speculations, there is a possibility. So, you know, it's always on TASIs and TASIs. So most likely what will happen is just, you know, keep holding for longer as possible until the economy be very, very overheated. And then we get on a credit spiral, and then we're going to be really bad. But the US dollar will be always strong. So it's definitely an opportunity to be long in gold, you know, on these scenarios. So just painting the word at the moment, it seems to be very chaotic. And if it's chaotic, we should be looking to move the portfolio to a real assets like houses, real estate, equity, you know, business, etc. Or we should be keeping the money into safe havens like US dollar, Japanese yen, as well as gold. All right. I wouldn't say Swiss franc because Swiss franc is a little bit tricky at the moment as well, but I will be focusing only on those three ones that I've mentioned. So, and the last thing is the trade tensions, right? So the imposition of the tariffs, it leads to a lot of concern about raising the cost for consumers and business. And this will potentially some way slow the economic growth. However, most likely in the short term, these actions will boost the US dollar because the investors will be seeking stability. Okay. So if we look ahead, I was looking up some bank researchers and etc. They have some sort of mixed views on the US dollar trajectory. All right. So some of them believe that continued trade tensions and potential retaliatory will measure from other countries could dampen economic growth. You know, and others argue that the US dollar will remain strong, you know, as always been, as long as it is perceived as a safe haven asset in times of those sort of uncertainties. Okay, so my opinion, all right, being very honest, I do believe that the US dollar can potentially continue to go higher, and it's still a very good price to be looking to short emerging markets like US dollar, Mexico pesos. If we look at here, it is a very, very good price to be long in USD, MXN, USD Chinese yuan as well. USD Chinese yuan, there we go. So all of those ones are into good pricing to be longing them, okay? Now, if we look at more developed economies like Europe, pound, etc., we could be looking to USD SEK. USD SEK is good. What's happening? Yes, go. USD SEK is good. There you go. I think it was who say that? Swiss. Yeah, USD SEK is really great. It just depends on what the swaps and the spreads will be. Sometimes the SEK, the Swedish krona, doesn't charge quite a bit on swaps. Okay, so just make sure to be looking to that. But it definitely a good one. Okay, definitely another good one as well. Now, moving up, going to the next section, US euro. All right, euro analysis. So let me go into charts and get euro dollar. I don't know if you guys remember, but we have a short position from last Wednesday on euro dollar that is in profit at the moment. We've been short on Wednesday. So Wednesday was somewhere around here. Okay, so we short somewhere around here. So there is a big move down into our favor. But the euro is experiencing some sort of decline against the US dollar, as we can see. It's pretty much on its near 2 years low. Okay, so we don't have that data, but if let me try to put on the daily to show everyone. But if we zoom out on the daily chart, so 2 years ago was 2023. So right here, so 2023 is over here. So basically we are 2 years low on euro dollar, okay? And most likely we could continue to come back slowly down to parity, all right, to 1. And due to the strengthening, of course, on the US dollar amid the global trend tensions, but there are other factors influencing the euro value as well. And there are 3 factors. And basically, it's the ECB, of course. There are some economic indicators that are suggesting a slowdown in Eurozone economy and the trade relations. Okay, so basically, the first thing, the ECB. So the ECB monetary policy decision, including the interest rates adjustment and the quantitative easing measure, it's playing a very crucial role into the euro strength that is actually weakening. Okay, so if we look back to the last meeting that ECB held on to last week, 2 weeks ago, if I'm not wrong, I think it was 2 weeks ago. You can correct me if I'm wrong, but I think it was 2 weeks ago. Most likely, what the market sort of took from that is that Lagarde is very bearish, very dovish, and she will be reducing rates even lower, even though that inflation is small, but the consumer prices are higher. So she thinks that if the inflation keeps lowering, most likely the trajectory of the prices for the consumer end will be following the inflation. In the end, it doesn't work like that. Well, it does, but it takes a while. But for fast relief things, it doesn't go that quick. All right. So this, of course, is weakening the euro. The quantitative easing that they are doing, the measure of the quantitative easing is weakening the euro as well because they're printing more money. Okay, so printing more money, it looks good, right? Okay, perfect. I'm going to print more money, my currency will be more currency, so it will be more strong. No, it's wrong, because if you have more of something, it becomes less valuable. Okay, so let's give an example here. How many Ferraris do you have on your suburb? Well, most likely 1, 2, maybe 3, depending where you live. But how many Toyota Camry do you have on your suburb? 1,000, 2,000, maybe 10,000. So the Toyota Camry, of course, there's nothing to do with engine, etc. else, but there's not the premium of as the Ferrari. So basically, shows to us that the Ferrari has less and costs more, and Toyota Camry has more and costs less. So basically, more money into the economy signifies less value to that money. Okay, so that's about it that is happening with the euro. And the second thing is the economic indicator. So basically, as I've mentioned, some recent data is showing some sort of slowdown into economic growth. And one of the particular sectors is the manufacturing and the export sectors. If we look at the PMI from the last releases on the manufacturing PMIs, we can see that it's somewhere below 50. It's going to somewhere below 50, and it's inclining to continue to go deep, dive deeper and deeper and deeper. So I don't know if you guys have read, but I've posted on ACY. You can type it up, ACY, coming to learn, and then market analysis. And then go into my name, Luca. Oh, sorry, not market analysis, education, guys. And then go into my name. And then you can come to, where it is. Well, it's not here. It was supposed to be here. Anyways, understanding inflation, no. Impact of the GDP, fundamentals, NFP. Yeah, it's not here yet, but I've made a video. I've made a, sorry, I thought it was live already, but it's not. It was most likely will come in a few days. But yeah, And so I've made an evergreen post so you guys can read it later. I can let everyone know when it's live, about the PMI and how to trade the PMI and why is the PMI is so important. Okay, so basically what I think about the PMI is an indicator, because PMI is not just like a normal indicator like a CPI or maybe retail sales, is actually showing presenting to me what is the business on the society actually thinking about the society. So basically, if the measures of a manufacturing PMI comes lower, meaning that the people are not buying because they don't have money, and therefore the business that are in manufacturing, they are not producing because they don't have clients to be buying the products. Therefore, they will be running on a loss. And if they run on a loss, they can't sustain themselves up for longer. Okay. So that's pretty much how it is going at the moment. Okay. For Europe. And I think it will be most likely for the whole quarter. Okay. And that's why I'm short euro dollar until parity. And the second and the last, the third and last thing is the trade relations. So, of course, Eurozone trade relationship, especially with the US dollar, with USA, is under a strain due to the recent tariffs announcement. And this will add even more pressure onto Europe because now it's expensive for people from inside of USA buy things from outside of USA on Europe, for instance. So they will prefer to be looking into local commerces, Therefore, it will be losing value on euro. Sorry. So therefore, there's no much people looking um, to exchange euros to US dollars. So there's more people looking to exchange US dollars, euros to US dollars and not US dollars to euro. Therefore, the US dollar keeps strong and the euro keeps weak and it keeps weakening. And therefore, we're going to be having a very, very bad euro dollar in the future. So basically, the future outlook remains uncertainty for Europe. Okay. Because if the trade escalations, if the trade tension sort of escalates, the euro could, face even more depreciation. However, if the ECB implements some sort of supportive monetary policies, and like the PMI sort of improves, the euro may stabilize. But two things from one, okay? One thing from two things. So the first thing is ECB want to implement a supportive measure for the euro, okay? And second thing is if we continue to have further escalation on the trade war, we won't have any indicators will be improving onto Europe. Okay. So that's about it. And you have to think about it. All right. Should we look to buy US dollars or should we be looking to buy euros? Well, most scenarios, I think everyone is entering buying US dollars. So short euro dollar. Okay. So that's my take on euro dollar. Now, moving over to Japanese yen. So Japanese yen analysis. Let me just zoom out. That's a daily chart. Wow, that's a big drop. So, getting out from Europe, US, pound, UK, London, etc., and now moving on to some like Asia currencies like the Japanese yen. What do you guys are thinking about it? I wanna hear from everyone. Let me know. I'm gonna drink some water and I want to see some messages on the chat. What are you thinking about the Japanese yen? Do you think this is strength of the Japanese yen will continue, or you think this is just like a really like simple thing to, and we'll, get off soon. Let me know. So Suleiman say potential buy, David say potential buy. Sweet say I think it could continue depending on the board, especially if they hike more. I'm gonna be honest. I think I'm gonna go with Sweets on this one because I do think it will continue to go lower. Okay. Well, overall, Japanese yen has been appreciating against the US dollar, as we can see from beginning of this year. Sorry, yeah, beginning of this year, right? Let me check. Yeah, beginning of this year on January to now. So we were all the way to 158, now down to 150, pretty much 152. Okay. So the reason being is investors are seeking a safe haven assets amid those global uncertainties as we have been discussing. Okay. And the yen strength reflects its traditional role as the refugee, as everyone wants a refugee sort of spot to during those times of economic instability that we seeing at the moment. Again, I've separated three factors that are influencing the yen. Okay, and what someone say also no tariff yet on Japan. Yes, no tariff yet on Japan. That's a very good point. I didn't even thought about that actually, but that's correct. So first things is like literally first thing that we should be seeing is the Bank of Japan decision on the interest rates and the monetary easing significantly will impact the yen valuation. Okay, so yen has been known as a safe haven, has been known as a carry trade because of the negative interest rates, the NIRP, right? Negative interest rates policy. Now that they are a PIRP, a positive interest rates policy, basically the carry trade unwinded. So what that means is the carry trade stops to exist because now it becomes expensive to get money on Japan and invest into a higher yield. You still can do it, it's doable, but it's risky because we're seeing a hawkish central bank at the moment. As before, we had a decade of a very, very, very dovish central bank. Very, stable data, very stable country. But now things are changing. So therefore, we won't be looking to have that carry trade on the portfolio anymore. And for that reason, people are selling their positions long on USDJPY and they starting to buy Japanese yens. So basically what they do is they short the USDJPY and stop to long USDJPY. So basically switching the portfolio slowly but surely, okay? And that is making the Japanese yen much stronger at the moment. And as Sweet say, especially if the Bank of Japan continues to hike the interest rates, USDJPY can continue to go lower and lower. The second point is as a safe haven, right? So because of the whole, it serves as like a US dollar, so, but a little bit more, I would say, special than USD. I don't know, more stable, I would say, more predictable than USD. So if we look for let's say the global risk sentiment that we're having at the moment, investors are seeking for safe haven again. Okay. And third point is economic data. So Japan domestic economic indicators like the GDP growth, inflation rates, trade balances, they're also playing a role in determining the yen's strength because they've been really, really great. Inflation rates are being higher. GDP has been fantastically good. Trade balances is continue to be very strong. The BOPs, the balance of payments, are continuing to be good with Asian countries, because now than never they will be stronger than ever, right? Those BOPs will continue to increase pretty like quick. So my expectation is to remain very strong, as long as the global uncertainty persists. So I think we could even short now or just wait for a small pullback and keep short in USDJPY until I don't know, to be honest, until somewhere most likely we will, break here. I've been looking at some researches, and they're looking at like 130, like crazy numbers. I don't think that can, I don't know, maybe if we look to a 1 year period, maybe yes, but not like a 1 day sort of thing. Definitely not. Pull back around where I'm not too sure. So it's let me go for the 4 hour. Just a second. Delete these. So because if we look at here, we had a very big acceleration on the price after we had that. So maybe somewhere around those levels here, 153 to 100, 153, 300. But again, it's a big trade. It's a big, should be carrying those trades. Okay, so however, you have to know that any significant changes into the BOJ, into the Bank of Japan, into the monetary policy that I've just mentioned, or improvements into like the risk sentiment or something like that globally, it will reduce that trade. Okay, the trade will be really out of pace then. But so far so good. I think we should be looking to short USDJPY. All right. Now, last thing, the gold, right? Looking at gold, what can we expect? Gold has been holding my eyes the last few days. Get gold here. So if we look at gold, gold has nearly reached $2,950. So it reached $2,945 or something like that. But if we zoom out, I've mentioned that long trade since here. Okay, I've called it this whole long trade since here. So there's definitely good opportunities still. Sorry, I'm just drinking some water. My throat is really dry today. So gold prices, as we can see, has surged to a new record highs above the $2,900 all the way to 2,945 per ounce. And this increase is driven by the investors sort of flocking to safe haven assets again and again and again. And we'll talk about that a lot of times. And what I think it can possibly happen is a continuation down here and then a long trade again to $3,000. Okay, I think 3,000 is the next target. Most likely we will have this pullback somewhere on here, maybe here, and then a continuation up. Okay, don't wait, don't short the top, don't wait too much. I think that's the way we should be going. So there are some concerns about the inflation on the euro. So the new tariffs is expected to drive inflation higher. And this will, basically ask for investors to take their money out, to sell those assets, to get rid of the loans and get the money and put into safe havens like gold. And again, the safe haven demand, the geopolitical tensions and economic uncertainties, they've been increasing week by week. And the demand will be increasing as well because the gold will continue to go high. And central bank purchases like central banks purchasing actual gold. The central banks, particularly in countries like China, they have been increasing the gold reserves further to supporting those prices, okay? So my friends, I think gold is a good trade as well to have on the portfolio. And I've been reading some bank researches, and I think the price could reach $3,000 per ounce very close in the near term. If the current situation remains valid, okay. However, any resolution into the tariffs, any resolution into Japan or something like that, this would be done. Okay, it wouldn't be like happening anymore. So, but I think we can have this pullback and then a continuation higher. Okay, so going over, we have an overview on the recent market developments. We saw that Trump is now imposing 25% tariffs on steel and aluminium, and this will make the US dollar stronger. We saw as well that the US dollar will continue to be a safe haven amid those geopolitical tensions. The euro will continue to face downward trends. Japanese yen continue to be strong if the Bank of Japan don't change the rhetoric. And gold as a safe haven, looking to long again until $3,000. Guys, thank you so much for today. I hope to see everyone back tomorrow. And yeah, stay tuned. Subscribe to the channel. Give us a thumbs up, and I'll see you soon. Cheers, guys. Bye-bye.